Gaurav is joining us this morning with yet another list of stocks to watch out for on the back of what brokerages are flagging off this morning. So, good morning, Gaurav. Take it away.
Well, yes. Let's begin with Nuvama Wealth because Citi has now, while maintaining buy rating and a target price of 6,000 rupees per share, they have also now started upside 90-day catalyst watch on this stock. What they believe is that there are further catalysts for the stock, which is news flow, capital market buoyancy, and cost improvement. All will play out for the stock in a positive way, and that is why they are being a little bullish on this stock. Next, let's talk about Man Industries because MK has now initiated with buy rating and a target price of 500 rupees per share. What they believe is that company is taking a next step, and there are two exciting projects with the company is building blocks to for growth, cash generation and returns. And lastly, if we talk about risk reward ratio, we get a better risk reward ratio with Man Industries, and that is why they are being a little bullish on this counter as well. Next, let's also focus on automotive ER&D space because now Incred has initiated on two companies, which is Tata Tech and Tata Elxsi. They have initiated both the companies with reduced rating. For Tata Tech, they are giving a target price of 797 rupees, and for Tata Elxsi, they are giving a target price of 6,064 rupees. What they believe is that the automotive sector is at a crossroad right now, and there are also some of the factors, the market headwinds, which are actually affecting these companies, like protectionism, pricing pressure, and the growth moderation, all of which will play in a contra way when we talk about stock price. And lastly, they also believe that this can also moderate the spending intensity or delay decisions from the company, and that is why they are being a little bearish on this sector. So definitely watching out on these counters because we are getting a strong word coming up from brokerages on all these counters.
So that was about those counters, Gaurav, but we also have Star Health that held its Analyst Day meet as well. Tell us about the key takeaways from that and what kind of targets were they charting out?
Well, yes, when we talk about Star Health, they are actually giving a very strong outlook when we talk about medium term. They are giving a 4-year growth outlook for FY28. What they believe is that they are reiterating their strategy on sourcing profitable growth from here on, and they also aspire to attain the market leadership in all distribution channels. Specifically, when we talk about some targets given by the company for FY28, they are going to double their revenue. So currently, they are expecting, if we consider the doubling the revenue, we may see gross written premium going around 30,000 crore rupees by FY28. When we talk about PAT, they are expecting this to increase 3-folds. So if we compare it with today's FY24's PAT, we may see this PAT going up around 2,500 crore rupees by FY28. And lastly, they also want to retain their retail health market share at 35%. When we talk about FY25, they are being a little bullish on that front as well. So they are guiding 100 bips improvement when we talk about combined ratio, and this will be driven by 50 bips improvement in loss ratio and expense ratio each. And lastly, they are also expecting this combined ratio to go around 95% by FY28, which currently stands at around 96.7%. Apart from that, they are also giving some guidance. They believe that the industry will grow at around 15 to 17%, while this company can grow 1.1 to 1.2 times higher than the industry. And lastly, they are also going to add 100,000 new agents by FY25. This number for FY24 was at 80,000 agents which were added in FY24. Lastly, when we also talk about some of the market trends which are happening on composite license, they believe that that is actually an opportunity and not a threat, and company is working to actually monetize this opportunity. And lastly, on the regulatory changes also, they believe that this is to benefit the policy holders, and this shall not significantly hurt the company's revenue or any kind of values. So definitely a strong word coming up on Star Health. Management is being a little bullish when we talk about the outlook, so it is worth watching out on what happens in this counter as well.
Okay, Gaurav, thanks so much for taking us through that. Star Health is going to be in focus on the back of all of those updates that Gaurav just brought in from their management meeting. But let's quickly move on and see what.
If you like this video, then like, share and subscribe to ET Now.